Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden secrets and soaring ambitions of the corporate world. And let me tell you, this latest report from AOI Incorporated is quite the rollercoaster ride. Get ready to dive into a financial report that reads like a thrilling and sometimes quite scary adventure into the world of fiber optics. We're talking about massive growth, some serious financial acrobatics, and a company that is betting big on the future, especially with the rise of artificial intelligence. And hey, before we jump into the nitty gritty, if you love getting these straight up, no nonsense breakdowns of complicated corporate filings, make sure you hit that subscribe button and the notification bell so you never miss an episode. Also, we have a fantastic community growing on Discord where we chat about these reports and so much more. You'll find the link in the description below, so come on over and join the conversation. Alright, let's kick this off by understanding where ABI stands. It seems the market really likes what they're doing, valuing their stock at over $1.4 billion as of mid-2025. That is a pretty hefty market cap, suggesting investors have high hopes for this company. But as we'll see, those hopes are tied to some pretty significant bets and some equally significant risks. Now, let's talk about the money. For the year ending the 31st of December 2025, AOI Incorporated brought in a massive $455.7 million in revenue. That is a huge jump, a 82.8% increase compared to the previous year. To put that in perspective, that means they nearly doubled their income in just 1 year. This surge is largely thanks to booming demand in two key areas, the CAT market, which is cable television, and the internet data center market, where all the action happens for AI and cloud computing. It seems like their CAT-V products, especially those designed for the latest DOCSIS 4.0 technology, are flying off the shelves, and in the internet data center space, they're riding the wave of AI, providing the crucial optical connections needed for all that high-speed data. The company expects this strong demand, particularly for internet data center products, to continue well into 2026, which is a very good sign for their future. Looking at the revenue breakdown, the CAT market brought in $245.1 million in 2025, making up a significant 53.8% of their total revenue. This is a huge shift from 2024, when the data center market was actually larger. The internet data center market wasn't far behind, bringing in $195.6 million, which is 42.9% of their total revenue for 2025. This shows how rapidly they've grown in this crucial AI-driven sector. It is clear AOI Incorporated is making a strategic pivot, and it looks like it is paying off handsomely. Now, booming revenues often mean a boom in costs too. Their cost of goods sold, essentially what it costs them to make their products, jumped to $318.8 million in 2025. That is a 70% increase from 2024. While that sounds scary, remember their revenue also shot up by over 80%. The key number here is the gross margin, which is the profit they make after paying for what it costs to make their products. In 2025, their gross margin was 30%. That is a significant improvement from 24.8% in 2024. This tells us that even though costs went up, they managed to increase their prices or reduce their other costs more effectively, leading to higher profitability on each sale. This improvement is largely scale production of their CAT-V products, making them more efficient. And that is always a good sign for a manufacturing company. Of course, to stay ahead in tech, you have to keep innovating. Their research and development expenses shot up by 55.6% to $85.5 million in 2025. This increase is driven by demand for new technologies like 800G and 1.6T products for data centers and their ongoing work on DOCSIS 4.0 for CAT-V AVE. They're clearly investing heavily in what comes next, which is essential for long-term survival and growth in their industry. Sales and marketing expenses also climbed by a substantial 66.7% to $30.2 million. This increase is linked to more aggressive sales efforts for their new quantum bandwidth products and higher shipping costs. General and administrative expenses, which cover things like management, finance, and legal costs, also saw a significant rise of 27.1% to $75.7 million. This is partly due to higher professional service fees and increased headcount as the company grows. Now, despite all this amazing revenue growth and improved gross margins, AOI Incorporated still reported a net loss. In 2025, they lost $38.2 million. This might sound bad, but compared to the eye-watering $186.7 million loss in 2024, it is actually a massive improvement. This suggests they're getting much more efficient as they scale up. And the heavy investments in R&D and operations are starting to turn the corner, even if they're not quite in the black yet. When we look at their cash flow, things get a bit more interesting. In 2025, they used $174.4 million in operating activities. This means that while they're making more money, a big chunk of that is being tied up in things like accounts receivable and inventory. Their accounts receivable, the money customers owe them, nearly doubled. and their inventory also surged. This can be a good sign if it means they're selling more, but it also means they need to be very careful about managing their cash. Their investing activities show they're spending big on the future, with $210.6 million used for capital expenditures, which are investments in things like buildings and equipment. This aligns with their strategy of expanding their US manufacturing and automation, especially for AI-related demand. It is a huge investment. And the company acknowledges it might not lead to expected returns, which is a real risk. But where is all this money coming from? Look at financing activities. In 2025, they brought in a stunning $527.9 million. This massive inflow is mostly from their at-the-market or ATM offerings, where they've been selling a lot of their stock. They sold millions and millions of shares, bringing in hundreds of millions of dollars. This tells us they are actively raising capital by issuing new stock, which is a common strategy for companies investing heavily in growth or needing to cover operating losses. One particularly noteworthy item is a warrant issued to Amazon.com Incorporated. This warrant, valued at a significant amount, is tied to Amazon purchasing a massive $4 billion worth of AOI Incorporated's products over 10 years. This is a huge vote of confidence from a major player like Amazon, and if they follow through, it could secure a massive amount of future revenue for AOI Incorporated. It shows a deep strategic partnership with real money tied to performance. Now, no financial report is complete without looking at the risks, and ABI Incorporated has quite a list. They highlight the dependence on key customers, which is always a concern. If just one of their big clients like Microsoft or Digicom significantly reduces orders, it could hit them hard. They also point to the challenges of operating in China, including changes in economic and political policies, labor laws, and the high turnover of direct labor. This dependence on China, both for manufacturing and a portion of their sales, is a significant risk factor, especially given the current global trade tensions. And in today's world, cybersecurity is a huge concern. They mention the constant threat of data breaches and cyber attacks, acknowledging that while they have measures in place, there are no guarantees. A serious breach could disrupt operations, damage their reputation, and lead to significant financial losses. Finally, let's size up the company's direction. AOI Incorporated is clearly on an aggressive growth path fueled by the AI boom and a strong performance in the cat feed market. Their move towards higher volume, more efficient production, especially in the US, is a smart strategic play to capture the growing demand. However, their reliance on a few major customers and the significant capital investments carry substantial risks. They are also navigating a complex international landscape with operations in China and Taiwan, exposing them to trade policy shifts and geopolitical uncertainties. While the recent revenue surge and improved gross margins are very positive, the continued net loss and high cash burn from operations mean they are still in a growth phase that requires careful financial management. So, what is the verdict? AOI Incorporated is a company with a compelling growth story riding the mega trends of AI and evolving communication networks. They are investing heavily for the future, and partnerships with giants like Amazon are a strong indicator of their potential. However, the path forward is laden with risks, from customer concentration to geopolitical complexities and the sheer scale of their investments. For investors, it is a story of high potential reward, but with equally high risk. They are clearly in a build it and they will come phase, and the success hinges on continued strong execution and favorable market conditions. What do you think about AOI Incorporated's aggressive growth strategy and their dependence on AI and cat feed markets? Let me know your thoughts in the comments below. If you found this deep dive valuable, please give this video a thumbs up and subscribe for more corporate decode sessions. And remember to hop into our Discord community via the link in the description to keep the conversation going. Thanks for watching, and I'll see you in the next one.